Hold up. Charles Hoskinson just dropped a bombshell that could completely change the stablecoin game forever. We're talking about the world's first private stablecoin, and the crypto community is absolutely divided. Some are calling it revolutionary, others are saying it's complete overkill. But here's the kicker. While everyone's arguing about complexity, Cardano just formed its first golden cross in August, and analysts are predicting ADA could explode to $6.25. But before you rush to buy, you need to see the heated debate that's tearing the Cardano community apart right now. What's up, crypto fam? If you've been following the altcoin markets, you know stablecoins are the backbone of DeFi trading, institutional adoption, and cross-border payments. We're talking about a $150 billion market that's dominated by USDC and USDT coins that are completely transparent and traceable. But here's where it gets interesting. Charles Hoskinson, the mastermind behind Cardano, just announced something that could flip the entire stablecoin narrative on its head. He's calling it the first private stablecoin, USDM, built on Cardano's upcoming Midnight blockchain. Now, before we dive deep into this controversy, let me paint you a picture of what's at stake here. Enterprise adoption of cryptocurrency has been slow, and you know why? Privacy concerns. Companies don't want their competitors seeing every transaction, every salary payment, every business deal. Traditional stablecoins are like doing business with glass walls. Everything is visible on the blockchain explorer. This is where USDM comes in with what they're calling enterprise-level compliance and granular privacy controls. We're talking about a system where employees can only see their own payroll, accounting departments can access amounts without personal identifiers, and legal authorities get temporary access only through court orders. Sound too good to be true? Well, that's exactly what has the crypto community at each other's throats right now. Some developers are saying this is 10x to 20x more complex than existing solutions like USDC. Others are questioning whether we even need this level of sophistication. But here's what nobody's talking about. While this debate rages on, ADA price action is telling a completely different story. And trust me, by the end of this video, you're going to understand why this USDM controversy might be the catalyst that sends Cardano to new all-time highs. Let me break down this heated technical debate that's dividing crypto Twitter and Cardano developers right now, because understanding this controversy is crucial for predicting where ADA price is headed next. Andrew Westberg, a respected Cardano community developer, just dropped some mind-blowing technical details about USDM's architecture. According to Westberg, we're looking at infrastructure that's 10x to 20x more complex than public alternatives like USDC. Think about that for a second. We're talking about building permission structures so sophisticated that different users see completely different views of the same transaction. Your HR department sees salary amounts but no names. Your accounting team sees amounts but no personal identifiers. Legal authorities get temporary access only through proper court orders. This isn't just cryptocurrency. This is enterprise-grade financial infrastructure that could compete with traditional banking systems. But here's where the controversy explodes. Andrew Juberg, another industry participant, fired back with a brutal reality check. His argument? Why reinvent the wheel when USDC already has multi-chain support, regulatory integrations, and mass market adoption? Juberg's concern cuts deep. I see very few uses for stablecoins that lack government-level integrations. He's essentially saying that all this complexity might be solving problems that don't actually exist in the real world. And honestly, this criticism hits hard. USDC processes billions in daily volume, has regulatory clarity, and works seamlessly across multiple blockchains. Why build something 10x to 20x more complex when the simpler solution is already winning the market? But Westberg's response absolutely demolishes this criticism, and this is where the debate gets really interesting for ADA price predictions. He argues that everything USDC does is public, and that's a fundamental problem for enterprise adoption. Picture this scenario. You're a Fortune 500 company paying contractors across 50 countries. With USDC, every competitor can analyze your payment patterns, figure out your business relationships, and potentially front-run your strategic moves. That's not just inconvenient, it's a competitive nightmare. Westberg outlined use cases that make traditional crypto enthusiasts' heads spin. Anonymous public transactions, government service payments, cross-border remittances that comply with sanctions policies without disclosing unnecessary data. We're talking about solving problems that traditional DeFi doesn't even recognize exist yet. Here's where this gets really complex, and why understanding this debate is crucial for ADA investors. USDM is being built on Cardano's Midnight blockchain, which means its privacy features only work within that specific ecosystem. Westberg acknowledged that once assets move off the midnight chain, privacy features disappear. This creates a fascinating technical challenge. How do you maintain privacy while ensuring interoperability with the broader DeFi ecosystem? This limitation could be USDM's Achilles heel, or it could be the moat that makes Cardano's ecosystem incredibly valuable for enterprise users. Now, while developers are arguing about complexity and enterprise adoption, ADA price action is telling a completely different story. And guys, what I'm seeing on the charts has me genuinely excited about Cardano's potential in this market cycle. First, let's talk about this golden cross formation that just confirmed on Cardano's 3-hour chart. For those newer to technical analysis, a golden cross occurs when the short-term moving average crosses above the long-term moving average. Specifically, we're seeing the 9-day MA cross above the 26-day MA. This is the first golden cross formation we've seen in August, and historically, golden crosses have been incredibly reliable bullish signals for ADA. At press time, ADA is trading at $0.7403, up 2.22% in the last 24 hours. More importantly, we saw a strong bounce from the $0.7199 low to a peak of $0.7424 before stabilizing. This price action suggests we might have found a local bottom. The relative strength index is sitting at 46.12, which means ADA has officially exited oversold territory. This is crucial because it suggests the selling pressure that's been weighing on ADA for weeks is finally exhausting itself. However, and this is important, trading volume remains concerning at $710.93 million, down 30.74%. This creates what we call fake breakout risk. Without strong volume confirmation, this golden cross could fail to sustain momentum. But here's why I'm still bullish on this setup. Market participants appear to be waiting and watching before making serious commitments. This sideways consolidation with improving technical indicators often precedes explosive moves in altcoin markets. Cardano still hasn't reclaimed the $1 psychological level, which is absolutely crucial for sustained bullish momentum. Breaking back above $1 would likely trigger algorithmic buying and attract retail FOMO that could fuel the next leg higher. This is where the USDM narrative becomes incredibly important for price action. If enterprise adoption stories start gaining traction, we could see fundamental buying pressure that technical analysis alone can't predict. Here's where everything comes together, and why this USDM controversy might be the most important Cardano development in 2024. Look, I've been analyzing crypto markets for years, and one pattern is crystal clear. The projects that solve real enterprise problems see the most sustainable price appreciation. Think about Chainlink's Oracle solutions or Ethereum's smart contract dominance. USDM represents Cardano's bid to capture enterprise stablecoin demand, a market segment that's largely untapped by existing solutions. If even 5% of corporate treasury management moves to privacy-enabled stablecoins, we're talking about billions in TVL flowing into the Cardano ecosystem. Here's what most investors are missing. USDM's complexity isn't a bug, it's a feature. Building 10x to 20x more sophisticated infrastructure creates a massive competitive moat. Once enterprises build their payment systems around USDM's privacy features, switching costs become enormous. This is the same network effect that made Excel dominant in spreadsheets or Photoshop dominant in design. The more complex and integrated the solution, the stickier the adoption becomes. Ali Martinez, one of the most respected crypto analysts, is projecting ADA could reach $3 to $6.25 in this market cycle. Based on the current Golden Cross formation and USDM development timeline, here's my analysis. Conservative target, $1.50. $2 if USDM launches successfully and captures modest enterprise interest. Aggressive target, $3. $6.25 if USDM becomes the standard for enterprise stablecoin adoption and triggers a broader Cardano ecosystem growth cycle. The key catalyst will be enterprise partnership announcements and real-world USDM usage data. But let's be realistic about the risks. If USDM fails to gain enterprise traction, or if regulatory concerns kill privacy stablecoin adoption, ADA could face significant downside pressure. The complexity argument might prove correct. Maybe the market doesn't need this level of sophistication. Additionally, the low trading volume suggests retail interest in ADA remains muted. Without broader crypto market recovery, even positive USDM developments might not drive significant price appreciation. So here's my take on this entire controversy. USDM represents either Cardano's biggest breakthrough or its most expensive mistake. The technical debate reveals a fundamental question about crypto's future. Do we optimize for simplicity and adoption or complexity and capability? My gut says enterprises will pay premium prices for privacy solutions that traditional stablecoins can't provide. The 10x to 20x complexity might be exactly what separates Cardano from commodity blockchain solutions. The Golden Cross formation suggests ADA has bottomed out technically, and USDM development provides the fundamental narrative for sustained price appreciation. If you're building a position, this consolidation zone around 74 cents looks attractive for long-term holders. But remember, this is still high-risk, high-reward territory. Only invest what you can afford to lose, and always do your own research. What do you think? Is USDM revolutionary enterprise infrastructure or complicated overkill? Drop your thoughts in the comments. I read every single one and respond to the best analysis. If this deep dive helped you understand the USDM controversy and its price implications, smash that like button and subscribe for more detailed crypto analysis. We're covering the stories that move markets, not just the headlines everyone else reports. Ring the notification bell so you don't miss our next video. Trust me, you won't want to miss it. This video is for educational and informational purposes only and should not be construed as financial advice. Cryptocurrency investments are highly volatile and speculative. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial advisors before making investment decisions. The creator of this content may hold positions in the cryptocurrencies discussed. Never invest more than you can afford to lose.